Ladies and gentlemen, welcome to another episode of our Property and Finance podcast. Today we have a very special guest, a VIP, a celebrity as such.
Oh, Jesus.
Gavin Rubinstein, the principal of TRG, the infamous character also from a global TV show now, Lux Listing. Gavin, welcome aboard.
Happy to be here, brother.
So Gavin and I go way back, and geez, over the years have both our businesses changed.
Yeah.
Gavin was once the number one real estate agent in Ray White for 6 years consecutively, 2013, 2019.
Yep.
Since then, he's transferred that skill of selling into managing a team. He's got over 50 staff now in 2 offices and growing. Predominantly operating still in the eastern suburbs, but I think you're expanding to the North Shore.
We are. We're opening in Hunters Hill.
Fantastic.
And I'm very much still selling.
And still selling, yeah. I believe you were saying...
That's number one for me.
Yeah, of course. Yeah, you got to stay on the front line. You know? I believe you were saying that in March you had a record month, or up there with one of the top months.
Yep.
176 million in sales.
Yeah, the firm did 172 mil, which is cool.
172.
In March. Yep.
So you've got great exposure to the market right now.
For sure, yeah.
Would love to talk through what you're seeing. It's an interesting climate out there at the moment. So bit of a finance recap from our end. So inflation, it was coming down, then it popped up, and it's coming back down, but it's still not coming down as aggressive as we would like to see. So the most recent quarter that came out last month, we saw it decrease, but not decreasing at a significant pace, which then changed the forecast yet again on interest rates, changed confidence and sentiment once again overnight.
Tumultuous, isn't it?
It's just so frustrating. And it's amazing how much the consumers react to this data as well. And then on top of that, unemployment, same thing there, like a yo-yo. We saw it go down, go up, and it's come back down again. So it's still below 4%, which is not where the government likes to see it. So with those two indicators, the inflation being the main one, we aren't going to see an interest rate cut anytime soon, is what everybody's thinking.
Unfortunately.
The next quarter of inflation, next quarter of data on inflation is going to be the most crucial, I think, for that decision.
Will they come down? Because people are kind of saying they may even go up, which is
inflation or the rates.
Interest rates.
Yeah. So there was the infamous economist from Judo Bank who did talk about 3 more rate rises to come. I don't agree with that. I think that's
going to be a problem.
I think that's just some media and causing some hysteria. He's saying 5.1 cash rate. The markets were pricing in a 50% chance of a rate rise in August. Now it's looking like an increase of maybe 0.15, which sounds odd, but that could be likely.
In August?
Or just it's priced in of the next few months that could happen.
Right.
Once again, the dictating factor is going to be inflation.
Right.
I personally think we're just going to ride this current level of rates for a while.
When's it going to go down?
3 to 6 months ago, I would have thought we would have seen rate cuts by sort of mid this year.
Yeah.
That's what the market was pricing in last year as well.
Yeah.
I'm surprised that inflation is where it is, and I'm surprised that the music is still playing so strongly in the economy.
Me too.
The economy is humming, which is a great segue actually into what you're seeing out there. So I can't believe that we're at record high rates we've seen for 10 to 12 years, and we're seeing record prices still in the eastern suburbs. I know, there's the common comment of the rich got richer through COVID, but still they're still borrowing money. They're still feeling the pressure. Some of these people also have their own businesses which are feeling the pressure. It's amazing. What's going on out there? What are you seeing across the different brackets that you operate in?
It's patchy and it is hard to read, and I don't think there are too many patterns that are consistent with each other. And so, we had a brief discussion before this started around renovated properties versus unrenovated properties, and I can't even give you a real pattern around that, because some unrenovated properties in great locations are thriving, and some done properties are struggling depending on other certain factors.
Which is the concern on renovating a building right now, because the building material is going through the roof.
It's crazy.
Builders going past. That's a separate issue. But the issue on that one is that the disparity has never been greater, right?
Sure.
Renovated versus unrenovated.
Massive.
It's a huge disparity. Some people have really overcapitalized on some renos and they can't even actually get their money back, right?
100%. And I think also there's a quantum value in the time, the effort, the energy which you need to dispense with regard to any sort of build. Like council, taking so long to approve things. And that's if it's within the envelope. Now, if you want to push the envelope, it's taking even longer. Then you got to go to court. Post that, it's getting the materials, the cost of the materials. If you want to build high quality, and I know you're building a house, so you know this better than anybody, right? High quality is going to cost you, and I spoke to Nick Tobias as of yesterday. I actually did a podcast with him, and met David from Horizon Building a couple of weeks ago. High quality, you're paying $15,000 a square, right? High quality, I'm talking, right? Now, I'm not saying you can't do it for less.
Starts at 10, goes up to 15 easy.
Correct.
10's now, 10,000 a square meter used to be a good budget back in the day.
For sure.
When I say back in the day, 3-4 years ago.
Exactly what he said. Exactly what he said.
And now 10,000's like entry level.
Super entry level. So there's that which takes time, and then getting it done and finding a good builder who's available that will do, good work. So like I say, not much consistency. But overall, like at the end of March, we talk about 172 million transacted for TRG, which is great to do. I was scratching my head saying, how? Like I wasn't expecting that, and I was expecting it to kind of level out a bit. We are seeing a lot more softening in certain areas, and some properties that are just struggling, even though they offer a lot and are good, like 1.5, 2 years ago would have flown, are now just sticking around and not moving and are taking longer. But it's definitely not blanket across the market. And I only speak for the eastern suburbs, right? Because that's where I sell. Yeah,
but let's break that down, right? So the ones that are, a bit trickier to sell as such, is common theme, common price range?
No, actually not. Again, no real pattern of consistency. It's just more so all properties have hairs. You know what I mean by that? And I think
nothing's perfect. Every house has some form of compromise.
Every house, right? But I feel like the hurdles or hairs at the moment are being somewhat amplified. Right? And they're a hell of a lot harder to get over. And when I look at the market now, when I look at the market 1.5 years ago or 2 years ago, the difference to me, and this is just my opinion, it doesn't have that frothiness, right? It's that FOMO is gone. That crazy hype is not there.
Where people used to just overlook these issues and just bid.
100%, because they're not compromising as much now. And as a result, what I'm seeing is definitely an increased days on market, where you'd have a sale in maybe a week or one inspection. Now, I'm telling all clients, like, don't expect to get a sale in even 4 weeks, 6 weeks. Like, prepare for this to take 10 to 12 weeks. Great if we can do it after one inspection. And that is still happening sometimes, right? But across the board, it's just not.
Right out. Yeah. I've heard from a lot of agents that they had 2 to 3, a lot of agents that say in eastern suburbs, being the market that we're talking about, days on market was sort of 2 to 3 weeks, and now it's blown out to 3 to 4 plus easily in the last sort of 6 to 8 weeks.
For sure. And again, price point dependent. My average sale price probably sits around, and I'll sell anything, by the way. I exchanged a couple of properties for 900 grand last month. But my average sale price probably sits either side of $8 million for average. So I'm selling more expensive properties, and that takes a little bit longer, right?
So to highlight that willingness to bid on properties that weren't ideally perfect, let's just say, essentially perfect, I should say, that's just a lack of confidence and sentiment in the marketplace, right? And
high interest rates. Like they were giving us money for nothing. They're not doing that anymore. It's even in the East, where there's lots of it, and inheritance still has an impact.
But that's why I still can't understand why there's still some great prices. There's still great growth. CoreLogic, in the last 12 months across Sydney has reported 8.7% growth still in property. We saw a bit of a patchy finish to the tail end of last quarter. So that's factoring in that patchiness.
Yeah.
We're still seeing crazy prices. There was that article that came out the other day. Potts Point apartment sold for 14 mil, unrenovated, uninhabitable apartment. I think someone started a reno and quit halfway through, and it's still got 14 mil.
Yeah, but great location, probably a big unit. And if you apply the formula we just spoke about in terms of new quality being 15,000 a square to what it would then take, it's probably on par that, right? Properties in good locations, they're going to sell really well. They are selling really well. And I think the growth is due to one thing and one thing only: supply and demand.
Supply and demand.
You show me, and I'm not just talking about the East, you show me a vacant block of land in Vaucluse. You show me a vacant block of land in Bellevue Hill. There's increasing demand. It's never stopped. I've been selling houses in that area now for 17 years. And although we've seen peaks and troughs, ultimately it's just gone one way.
Yeah.
Like, I remember when I started 17 years ago, and there was GFC, I think 2007, 2008 from memory, and then it recovered. And people were talking about the prices that they had achieved before GFC, saying that they were crazy. And I remember this one house in particular, 54 Kings Road. It got the highest price paid at the time was $615 million. The agent who I was an assistant for sold it. And one of my agents sold it, I think 2 years ago for 12. He did no work to it.
Wow.
And we were saying at the time that was fucking madness.
Yeah.
But when you consider all of these factors you talk about, and you can create paralysis by analysis the more you look into it, the one factor there being supply and demand is that premium land. They're not making any more of it, and there's increasing demand. And so many people have made so much money from the uptick in capital growth that they can leverage from, you know. A lot of people, yes, have lost money, but a lot of people have made a lot of money in COVID. And then, of course, you got in the East, which plays, and not just the East, I think all around inheritance, which is a huge injection of cash. So I think when you put that all together, it crystallizes it a bit more.
Let's talk about that inheritance and people getting help from the mum and dad and all that. You know, last year we saw that 1/3 of all buyers were all owner-occupied purchasers, I should say, were purchasing at a 60% or less LVR, right?
Right. Yep.
Big healthy deposit, 40%.
Yep.
That means they're not so sensitive on rate movements. And also to my comments earlier at the start of this.
That's interesting. Yeah. Okay, yeah.
In my comments earlier on the start of this podcast, people are so reactive to interest rates and inflation data and what's going on globally that they will make decisions and pay top prices and borrow with I guess, stretch repayments, knowing that it's a short-lived problem.
Yeah.
You know, it's only a short-term window of these elevated repayments because they know that it's just to ease inflation. And then there's the good news around the corner, that's what people were hoping for. And now as that corner gets a bit longer,
it's unknown.
That confidence is dropping, right?
Yeah.
But back on the bank of mum and dad, the other thing that we're seeing a lot of, and once again, this is on some other podcasts I've listened to, is you speak about inheritance, but now actually downsizers are giving the cash to their kids sooner rather than later so they can help them with a family home for their family, for the grandkids.
Yeah.
You know, so people aren't waiting for inheritance these days. They're putting their hand up and saying, I can't afford a family home, mum and dad. You've got a big 4-bedroom house. It's just the two of you. You're thinking about downsizing. Downsize and help us upsize. Of course. And those conversations are happening quite fluidly.
All the time. I mean, and the ones we know about, because there's a lot of people I think out there who would keep that information confidential too because of pride and
of course
and other reasons,
especially to the real estate agents. Yeah.
Right, of course. But I think ultimately, like when you have a look, and you'd know these numbers better than me, salaries have not caught up nearly with property prices.
No.
So it just wouldn't be possible.
Yeah, we should actually reference that data. So I think about 30 years ago, the average a house price compared to the average income was about 3 times. Now it's like 8 or 9.
Times. Yeah, not surprising.
Difference there though, key shout out, and this is a sign of the changing times, is that 3 decades ago there was probably 1 household supporting an income. Now there's 2.
In some
some areas. Most of the time these days there's 2. And there might be a debatable period where, you know, the wife stops working for kids, but a lot of women are going back to the workforce these days and enthusiastic about staying in the workforce. In fact, in America, I heard an interesting statistic that came out recently, late last year actually. More single women are owning real estate across the country than single men.
It doesn't surprise me.
Yeah.
I mean, it's a different dynamic there. I always talk about it just from a real estate perspective because that's the space really that I understand. Past that, I'm kind of lost. But real estate is an industry. You look in America, you look in the UK, you've got a lot of females dominating real estate. And you look here, and there's 1 or 2 names that have been around for 30 years that get business because they're good, and a big part of it's default too. But you just don't have as many females, and it's always something I query because I think, me personally, I'd love to buy and work with female sales agents. So I always question the difference in the dynamic, but it is definitely, you know, women in America, like they They want it more. They're more entrepreneurial, I find. They're more, they hustle harder.
That's America as a society as a whole, I feel.
Which I love.
They back entrepreneurs. People get around entrepreneurs and they pump their tires and they want to learn and support them. Here, unfortunately.
Here, they want to cut you down.
Yeah,
mate.
here, unfortunately, we've got the tall poppy syndrome.
It's bad.
And there's a lot of negativity sometimes of people that are shining.
Of course.
In America, they live and breathe it,
For sure.
And they manifest entrepreneurs sort of a lot more. Let's go back to this market conditions. I'm sorry, but you're on the forefront of the real estate market in the eastern suburbs.
Sure.
You've got a big team, big reach, and seeing a lot. So I want to just stay on that topic for a bit longer. Let's break it down into segments, right? Apartments. What are we seeing in apartments at the moment, the lower end? Are they still a bit patchy because they didn't run in COVID? They haven't really run. They've had the worst growth the last few years.
Yeah, I mean, you mentioned it was a bit questionable tail end of last year. I saw that in the apartment segment. This year, I feel like it's improved. And I think
because people are chasing value, right? And there's value there now.
Yeah, and I feel like it's all about the price. Right? I feel like there's a really solid stream of buyers going this way for apartments and all properties, actually. I feel like the vendors are going this way. And if you connect the vendors to this stream and they get realistic with regard to the price, I think there's great business to be done.
So there's a bit more confidence in, I guess, demand in the apartments. Prices are looking a bit better than they were in the past.
I think so. I think it's pretty level. I feel like all year it's been level. I can't look at apartments and houses and say they're too different. Some are going really well and some are just taking longer. Even the ones that are taking longer end up in a pretty good place eventually. So
and then let's move up the price sort of bracket. Let's say houses, for that $2 to $5 million bracket.
Yeah,
I heard they're the ones that were a little bit patchy. They're the ones that, some are good, some are on the market for longer than expected and struggling to sell.
I don't know. Look, I had a house in Buller Street in Bellevue Hills sell last week. We were guiding 3.8. It's 400 square meters. It's land value. Buller Street is not Victoria Road. It's not Kambala Road. It runs off Bellevue Road near past the pantry. So it's a great level walk to the village, but by no means is it A++.
Renovated?
Land value. So complete knockdown.
Okay.
And I mean, we were getting 20 groups through, each open for inspection. We had maybe 10 offers throughout the course of the campaign, up to 4.5, 2 buyers locked in, and we sold it for 5.6.
Well above the owner's expectations?
Well above.
Yeah, wow.
I mean, we're guiding 3.8 to start with and getting groups of 20 through and probably had about, like I said, 10 offers throughout the course of the campaign. So,
and see, that completely contradicts what I was saying about people chasing the renovated properties, right? Like that's someone that's got the renovator's dream still. They've been watching the block and they're inspired.
Right. Well, it's kind of like you look at that from a value point of view and say, yeah, that's a lot of money for a 400 square meter plot and not an A+ street. But then I challenge you to say, find me another 400 square meter level block in Bellevue Hill for under 6.
About to say that's entry level,
and you can't.
Yeah,
and this goes back to my whole point about supply and demand, and that's what's driving it, and that's what I think will continue to drive it.
Yeah, because like other markets, for example, in the eastern suburbs, Bondi, North Bondi, there's nothing around that price range, right? There's nothing in terms of 3 to 4 bedroom houses. There's just no supply in North Bondi.
2 weeks ago, Forest Knoll Avenue, a friend of ours sold it. We don't have to mention their names. We know them both. And there's a nice block of land for Bondi. I think it's, don't quote me, 400 to 500 squares, 7.75 million. Rebuild. They got to rebuild.
Wow.
So then apply the maths to that in terms of what we just spoke about regarding what you're paying per square meter to build. So you're 775 for the land. Stamp duty, you're in probably 8.5. You got 2 years before you build. You're probably going to put a 350 square meter house there. What's that? $5 million, $6 million build?
Yeah, wow.
This is current. This is happening right now.
Yeah. So it's funny because the reason why, the chat is the $2 to $5 million bracket being the bracket that is hurting is they're the young professionals that probably geared up a bit aggressively in COVID to buy that home or prior, geared up, in the last 5 years, let's just say. And they a bit stretched at the moment with rates going through the roof. And also some of them have gone from, to my point earlier, 2 incomes down to 1. So repayments have, the interest has tripled.
Sure. Income
has potentially halved. And they're at 80, 70%
How are
mortgage.
people doing it, right?
Yeah, it's crazy. It's a crazy time. So, and let's move up the ladder a bit, above 10, I'm hearing stronger than ever.
I don't know so much. I think,
yes and no.
yeah, I think I really feel like for the first time, each price point is pretty comparable in terms of some things are doing well, others not so well. And there's no pattern whatsoever. As much, and I studied like all day. You know, I'm not married and I have kids. So like 7 days a week when I'm on, you know, I'm in the real estate market, right?
Yeah.
Looking at everything that's happening. There is no consistent pattern. Some things are good location, need a lot of work. Other properties are turnkey. There's just not right now any sort of consistency. A lot depends on your timing. A lot depends on the buyer.
What about some consistency, at least in the people that are going in confidently and paying stupid prices? Are they like tech guys without naming names? Like, are we talking young entrepreneurs? Are we talking, you know, what are we still seeing a lot of overseas?
A lot of overseas expats coming in.
Expats?
Yep.
Overseas buys though, like, you know, is the Chinese market still strong?
Very.
Yeah.
Very there around, but they're more local as opposed to overseas. They're local Chinese. Yeah, it's a real mix, Theo. I wish I had some sort of consistent pattern to tell you, but I don't.
I'll tell you what's going to be interesting sale is that the most expensive house.
Million.
Yeah, the most expensive house in Australia.
Oh, it's got to get it.
Former mortgage broker.
It's got to get it. It's got to get it all close.
Do you reckon close?
Irreplaceable location.
It is irreplaceable. But didn't he won the market about, what was it, 5 years ago? He won 130?
Possibly, but 5 years ago, we were in a
market.
completely different world.
Isn't it a crazy thought that maybe in 30, 40 years that property will be worth $1 billion?
Crazy.
Yeah.
And look, if you look at what history's done in the last 30 years, if it continues, could be close.
Yeah, what are we talking there? 22 car spots, 2 commercial kitchens,
Crazy.
2,200 square metres of land on the harbour.
Crazy.
He had a ballroom downstairs for the Christmas parties for 500 people, I believe it's at.
For his home loans company, yeah. I think just the location, right?
Yeah.
Supply and demand, find a location like that that's available. Then you talk about the cost of building, the difficulty to build on that site. Alexander's a great architect. You know, it's look, let's hope he gets it. I actually went through it. I was shocked. And I've seen some pretty good houses over the course of the last X amount of years that I've been working in the business. The layout of it, the finish of it, the sheer location, the position of it in the sky, what it offers, I've just never seen anything like it. And
run me through it. Size?
Right, so you've got internal approximately 450.
Wow.
External approximately 250.
Jeez.
6-car garage. You've got 5 bedrooms, 5 bathrooms.
Yeah.
Right? You've got unbelievable height and volume. These massive outdoor terraces with the most insane finish. Wolf, double Sub-Zero in the main kitchen. The butler's pantry has another double Sub-Zero. You've got a double Wolf there too. You've got 300-bottle wine cellar.
Wow.
Marble slab, book matched, spill matched everywhere. The best joinery you've ever seen. Phenomenal lighting, Venetian plaster, top to bottom. I mean, this thing is, and views that will blow your mind. Like you feel like you are somewhere in New York and you have the highest perspective in the city. It's crazy.
Okay.
So we thought about trying to think outside of the box to launch it. And my view was when I went through, holy shit, if I had to spare 30+ million bucks.
That was going to be the $1 million question, no pun intended. What's the price tag?
30 to 33.
Wow.
Now, if I had to spare 30, just sitting there doing nothing, no brainer. So in my mind, it's kind of the apartment you never know or knew you needed till you go through. So of course we're marketing on the basis of what we always do with a campaign and getting lots of exposure. And we've been there 5 times this week because we just launched last week. But I thought, why not put on, an event, right? Invite people from my network, invite buyers agents, invite other real estate agents.
That's very
New York style, right?
Yeah, I was about to say very American. LA, New York, have a bit of a cocktail party.
Got a cocktail party. We've got Patron El Cielo sponsoring the event. We've got we're going to have some food. We've got a live jazz band, and want to do it for a good cause. So I've got Damien Cooley, who is, in my view, the best auctioneer in the country, coming down and auctioning off about 13, 14 items of like some of the coolest things and most exciting, just fun items to buy. And we're donating all of the proceeds to charity.
Beautiful. Which charity?
Sydney Children's Hospital.
Oh, beautiful.
So I thought, kill 2 birds with 1 stone, do it for a good cause, have a bit of fun. And if someone from my network comes through, happens to love it, I know a few of them have definitely the freight to be able to love it, or even they tell someone about it who ends up coming through, it's win, 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 win.
So at 30 mil, that's not like a downsizer's house, is it? Not really, a downsizer's place.
Well, it could be because it's got an internal lift. And it's like I say, it's 450 approximately internal. So at 30 mil, you're about 67,000 a square meter, which, by the way, is damn good buying.
I was about to say, that's about market in the CBD, right?
It's, if you compare it to some of these other penthouses that are on the market that have sold, it is the best value for this quality Sydney has seen, and that is not a pitch.
Have we seen, can you give us some reference of some crazy other prices we've been seeing in the CBD?
Well, you know about the ANZ penthouse that got 60 plus.
Oh, yep.
Right?
And that was built a while ago. That's not so sparkly and new anymore.
This thing's got a spa that looks directly at the Harbour Bridge and Centrepoint Tower. Like it's
wow,
ridiculous. And
sounds like a Bond villain's apartment or something.
And the way it's framed up and the quality of it, right? It's just another whole level. So we had a pretty transparent conversation before starting, myself and Greenland, who are the developers, and they didn't want to muck around. They're on the market to sell. They had no intention of sitting there for 2, 3, 4, 5 years and then chasing a unrealistic number down. And, I looked at the comps, I looked at what it offered, and they listened and they're open to it. So someone's going to be very happy with that.
So a bit of a soft launch this Friday, then you got to go full, go to market and sort of do a full campaign and hope to sell in the next sort of
yesterday.
I love that confidence. And obviously you got the exclusivity on it, or
of course. Yeah. But always open door policy, right? If any agent or buyer's agent have buyers, they can always call me. I'm happy to do a deal.
I like that. All right. Well, let's move on. Let's touch on some of the other things they're talking about in the that have been spoken about in the marketplace right now. We've got a bit of a rental crisis. Everyone talks about, been happening for a while.
Yeah.
There's been debate, about capital gains tax discounts being abolished, and also negative gearing.
Yeah.
Thankfully, I think we just saw this week Jim Chalmers come out and say that they won't touch negative gearing, which I think is crucial. I've spoken about in several episodes on this podcast that at the moment, the last thing the federal government should do is disincentivize investors in any way, shape or form. We need to be encouraging investors, not discouraging investors. I understand people think that it puts pressure on affordability and it puts pressure on house prices, but we've also got to think about tenants. There is no supply for these people to rent. The rental supply is like all-time record low, right? It's crazy. And they've even had to introduce new laws. I think it was the year before last in December 22, where people aren't allowed to bid on rental applications anymore. Right?
Wow, I didn't know that. Okay.
Yeah, about a bit over a year ago, they introduced laws where the asking price is basically what your application needs to go in at. You can't be, if someone's asking $1,000 a week on a rental property, you can't be putting $1,200 a week.
I didn't know that. Okay.
Yeah, because it's getting too crazy. And,
interesting.
It's just, there was queues out the door and, of these rental properties, and people were bidding like crazy.
So again, my guy, and we've got, I think, just over 400 on our rent roll. We're 3-4 years old. We built it organically.
I was about to say, is that organic growth? Because that's fantastic.
Organic. And it's all right. We've got a long way to go. We'll get there. And I was just talking to Jerome this week who was saying quite the opposite. He's noticed a few tenants are actually getting out of their leases, breaking their leases because they're getting better value elsewhere. And he's noticing real pressure on
prices, rental prices.
Now, again, East microcosm. He's talking specifically a couple of two-bedders in Bondi. Feels like there's a lot of supply in that area.
That's like the bread and butter, right?
Right, that's what I thought. But then there's a couple of houses he's been speaking about too. I know he's got a house in Chamberlain Avenue right now, about 4.5 a week. He's probably going to put that down to 4. He's got a really good house in Dover Heights, Mayuna, around 3,950 a week, just kind of sitting there. So, conflicting that.
But so prices are one thing. But supply, are you seeing?
Not a hell of a lot.
What about your landlords? A lot of them, I've been hearing across the board that a lot of landlords are actually selling their properties because they've got debt on their home and they need to pay down the debt. And this property that they had, which was once positively geared or at least breaking even and covering itself.
So we're seeing
now
more
costing them money.
Yeah, if not that, more so just people not seeing the value because of interest rate rises versus the asset that they've invested in. Like I had an investment property myself that started the year based on what the repayments were going to go up to, having how it served me to the point, how it was going to serve me in the future. I made the decision if I could deploy the cash and use it better. So I sold that, as I said, because I noticed that.
There you go. You're one of them.
Yeah, 100%. That apartments are doing better than they were last year. I sold it in 7 days, and it was a great little outcome. And I am using the cash for a much better proposition. But there's a lot of that happening, right?
Well, and accountants are probably giving that advice right now. If you're, paying 6% on some debt on your primary residence, and you're paying 6.5%, 7% on your investment property, and the thing's negatively geared and costing you an arm and a leg. Yes, you get some deductions on that investment property. If there's a significant amount of capital, some equity tied up in the investment property, realize that capital and pay down your debt. It's not bad advice. I get that.
No, and it also depends. Like, what's the property? How much further will it appreciate? How much appreciation have you gained? So, I mean, there are so many factors. Do you like it? Like, I like to play with things I like and I'm passionate about. Does it excite you? Like, for me, I want to be excited. It wasn't exciting me much anymore. So
that's a bit of an inspirational comment there. Can we elaborate on that one? Have you got some exciting plans in the pipeline that we're allowed to share?
I'm always planning things, but not things I like to share necessarily when it comes to personal stuff. But yeah, of course, I think there's awesome opportunity out there, and I'm always able to find a positive in every negative. And I think the market's, and this is just my view again, I keep saying that, I think the market's in a place that no one really understands, right? There's so many conflicting views, theories, reports, numbers, analysis.
It's overwhelming. It's confusing. It's frustrating. People lack the confidence to make a decision because there's too many numbers in front of them. There's too many news articles and too much information at your fingertips.
Correct. So I kind of stay true to making a decision based on what we know today, not stressing about what we don't know tomorrow, and always view property as a long-term thing, right? If you're going to jump in it for 12 months, 18 months, unless you get lucky, you can make a big earn in that period, particularly when the market was a hell of a lot more frothy. That's not really happening anymore. You'll be okay.
I love that advice. It's so true. I've been saying that here for over a decade at Shaw Financial. Don't try and pick the market. Don't try and, forecast, rates are now going to stay higher for another 6 to 9 months. That means, spring this year, the market's coming off, I reckon, 5-10%. I'm going to wait and buy a property there. The hardest thing to do is find a property that you want to buy. So when you find that property, set your budget on it and just jump on it if you can.
Yeah, and I think also play a bit of a safe game whereby you say, worst case scenario, and this is not what I think is going to happen, but worst case scenario, let's say shit does hit the fan and does come off 20%. What will my position look like then? Can I still service it? And if you can, I think you're good to roll, right?
Well, 20% is a scary number to come off. Let's maybe not say that. Let's say maybe 5 or 10%.
So right? I don't think it's going to go there, but I think it's always good to play it safe.
I agree with you.
Depending on how far you're pushing yourself.
And also, let's just say that it comes off 5 to we'll use the 20% number because it's a scary one. Even if it does come off 5 to 20%, you're only going to recognize that loss if you sell in that market, right? So to your point, just have a buffer to carry yourself through.
And by the way, it's all relative, right? So if you are selling, you'll be able to buy something at that level, depending. I just always think of this number, going back to what I said about the property market going up, and I've only seen it going up ultimately in the last 17 years. In the GFC, some prices, not across the board, but some prices were off 20 to 30%. That's kind of the worst we've ever seen it at that stage. So, everyone's got a different strategy. There's no right one. But
one thing I definitely can say, and I say it confidently, is that this current landscape is definitely a good landscape to transact in because naturally borrowing capacities are crippled. People's affordability is crippled in terms of how much they can borrow and how much they can afford, both on repayments and also serviceability in the bank size.
I think it's realistic.
Yeah, it's realistic.
If that frothiness is gone, I think the superficialness of it is out.
And on top of that, the data says confidence and sentiment is low, record low. It's been up and down, and right now that we've got global issues as well, not just not just economic, but also we've got potential wars. So I think once rates come back down, if you can execute in this current market and buy a property and transact, I know this sounds obviously biased for a mortgage broker and real estate agent, but if you can execute in this current market and afford the current repayments and get a loan approved at the level that you need to buy what you want to buy, once rates start coming back down, it's just going to be like that little bit of a credit crunch post the Royal Commission in 2019. The floodgates will open and the market will run.
Yeah, I agree. I just love it. It's a great force saving. Everyone's different. I think it's a great way to force save.
So I agree with you there in terms of the repayments and putting some cash flow away into your home, which is the only tax-free deduction pretty much you can get. A tax-free investment, I should say. So what we just touched on all there also is a great segue into a question I was going to ask later, but let's just jump into it. So on this podcast, we've got an equal amount of our clients and customers, you could say, that are listeners, but then there's a lot of real estate professionals that we deal with. We've got 2,700 real estate partners that we work with, and so no doubt, being the amazing agent you are and your accolades across the industry, there's going to be some agents here tuning in to hear some of your words of wisdom as a real estate operator. So, we're seeing a lot of real estate agents, despite sometimes once again the negativity that real estate agents can get of being,
bogged down by the rigors of real estate.
Well, I was about to say that everyone thinks every real estate agent is making millions of dollars, but majority of the industry don't make millions of dollars, right?
No, I think the average salary is 60 grand across Australia.
So there's a lot of real estate agents, to my point, out there struggling, just like mortgage brokers right now. It's gone quite quiet the last couple of years for mortgage brokers because of transaction volumes.
Yeah.
We started strong this year with supply. We had a great first quarter, but supplies dried up again. And there's some real estate agents out there that are probably struggling to navigate this current marketplace or the current economic climate, I should say. What's your advice out there for real estate agents? You want
the silver bullet?
Yeah, let's go with the silver bullet.
Hard damn work, man. I don't think it changes. I think, me personally, I'm working 7 days right now. Sundays I'm at showings. I'm on the phones. You can't miss an opportunity. You've got to really give your client every opportunity to make a decision themselves, irrespective of your opinion on what the price is and price should be, because you don't know what's going on in the back room. And I've seen a lot of agents cost clients money, opportunity costs, and not having that frank conversation.
Elaborate with that. What do you mean by that?
Well, I mean, some agents walk into a property and say, well, this has got to be worth X.
Overpromise, underdeliver.
Massive. And
oldest trick in the book.
Like I said before, no one's an expert right now. No one really knows.
But it's annoying. Let's talk about advice to agents and I guess equally to our listeners. It's annoying that strategy does work sometimes.
Well, of course it does. I mean, people buy into hope.
Yeah.
People buy into hope.
The vendor believes the guy promising or the woman promising the highest price.
Sure, not always. But I think you should promise a process that gives the seller insurance that they're going to get the highest price rather than a particular number. Right? That's kind of a safe zone, and it has always been a safe zone for me. So, I take solace in that. I've seen a couple of examples, without mentioning addresses and names, of agents who've walked into houses and said it should be worth X, and 6 months later, it's not, and it never was. Even in the frothy market, it's cost those guys money. And when you talk about $15 million, $14 million, $16 million, 10% on that, 20% on that, that is a lot of dough, mate. Yeah. It's a lot of money.
It's costing, obviously, the vendor money as they sit on the market waiting for this crazy price that was never realistic in the first place.
Correct.
But it costs the reputation of the agent too, because that word gets out quite quick, right? That they're known for over-promising.
Yes and no. I don't know. I mean, I know some people in my neck of the woods have been doing that for a long time and they're still operating. So, I mean, that'd be a piece to them. I think you can't be afraid of, like I said, hard work. You've really got, a lot of these agents, and that's why I like a more realistic market. I like a tougher market. Market goes south, right, and it gets tough. People want the guy who's going to get it done in their corner, right? It doesn't matter if they like him, don't like him. They want the guy who's got the experience. Like, I cut my teeth in the GFC, so I'm very comfortable having those hard conversations. By the way, with the buyer as well, not just with the seller, which counts. I think experience is key, understanding supply and demand, I think is absolutely paramount. And, you know, back when the market was bull, they'd give anyone a house to sell, try to cut their fee as low as possible, and hope to sell the house after one inspection. Versus today, you know, agents got to earn their money. They've got to work 12 weeks on a program, right? So there's no question on my fees anyway, particularly at the moment, given what we need to put into the process.
Yeah, no discounting.
Absolutely not. And if anyone wants to, they can use 10 other people, but they ain't going to get me.
Yeah, pay for quality.
100%.
Yeah, and I have to say, when you're talking about your neck of the woods, we're talking about a very competitive real estate market, right? You know,
probably the most.
It's dog eat dog, and without naming businesses, I know some businesses in the eastern suburbs, they say the worst dog's the one in the backyard working in the same office, sometimes sitting next to you, right?
That look, I must say, lucky enough to never had that in and at TRG. Like when I started, one of the big things to me was always working in collaboration. Like I think we've got a process if there is any crossover, general manager, HR works through all of that. And then if it gets really to the point where it can't be solved, I've got to step in and then we'll read the right act and that won't be questioned. But I've had to do that maybe twice in 5 years, which is not a lot when you consider the operators I've got who represent the firm. And I'm very lucky to have the guys. We've got really high-level practitioners, you know, guys like Ollie Lavers, you've got guys like Zach Raven, Kai Thomas, Pat Cosgrove. You know, these Adam Regan just joined us.
They're hungry.
These guys are big deal makers, right? Big deal makers. So, I mean, one of the things I'm proud of is, and I can only speak it today, I don't know what tomorrow brings, but watching these guys work in collaboration, having the culture that we do, so...
Can I ask, you know, how do you create a culture of, you know, being hungry, working hard, and all that type of stuff? How do you maintain that culture, especially when you've been in the game for so long? What's your advice to other real estate business owners? Where I know you do some things. I've heard some rumors actually about you, Gav.
What are the rumors?
Are the rumors that you have like a group gym session as well? You get them up early and make sure they're training and getting fit together.
Not really. Like it's. No, not at all. There's no prerequisite to do anything outside of what you're comfortable doing at TRG. But to answer your question, like I don't ask or expect anything of anyone that I don't do or expect of myself. And so I like to lead from the front. And so, you know, this is why I make a point when you first introduced me, like my passion is the deal. It's always been my top passion. That's always the main thing for me. I like to keep the main thing. So, you know, how I structure my life, my business, and everything else that I'm doing, I never get distracted from the deal, the listings and the sales, because that's where my heart lies. So everything I'm doing, I'm just leading from the front and showing them that it's possible, right? So it sets the tone.
But you, like many other successful list agents I know, you're living and breathing your job, and you're working 6-7 days a week, right?
For sure.
And naturally, some people with families and kids don't want to work as hard as that, and they're on the 4 to 5 day a week sort of work cycle.
And I never press them.
You don't press them.
Never.
Yep. You let them have their flexibility. You just do you. They do you. That's
100%. Like for example, this Saturday, we went to a Rumble class before opens. I like it to set the tone. Starts at 7. It's not that early during the week. 4 days out of the 5 days, I'm up 4:15. I work out twice. Then I hit, you know, my day. I don't expect anyone to do that, right? And I don't even expect anyone to come to Rumble, but we have the option to say to people, hey, the office is getting together. If you want to come along, 7 o'clock, TRG's taking care of it, come through. And we had maybe 15 people of the 50. I didn't press anyone. You know, if you want to come. If you want to jump on the train, the seat is there. And if you want to move at your own pace, I respect that too. And I'm here to help you when and if you need it. And I think the combination, particularly as we are growing, we're a new company, we're 4 years old. It's going well.
How have you found that transition as a salesperson, going from, you know, just focusing on selling to now focusing on running a business and building a team? It's a common transition in our industry as well, right?
You know what? I'm so motivated by learning.
Yeah.
And if I look at the past 4 years, what I have gained in knowledge, experience, exposure, and identifying certain patterns is just awesome, right? For
you're growing.
Yeah, and I really enjoy it.
When I say growing, you're not just growing a business, but you're growing.
I thought you were saying growing physically. I'm like, I wish, man. Unfortunately, that stopped years ago.
Yeah, that stopped a couple of decades ago.
Than most.
But I mean, you're growing as an individual. You're learning and you love learning and growing, right?
I do, yeah. And I think, Yeah, I know where we're headed, and I've got the swing of it. Right, it's taken me this time to get it, but I lock in, and when I don't understand something, I focus on understanding it. And once I understand it, the repetitiveness of it becomes really simple to me.
Can I ask one, I guess, somewhat sensitive question that someone like yourself would be dealing with all the time, being a high performing agent? I'm sure, especially in the dog eat dog culture of the eastern suburbs, a lot of competition, other real estate agents would try and win a listing off you, like other successful agents and operators in the eastern suburbs,
sure,
by saying, well, you're not going to get Gavin's attention. He's number one at Rated Y. He's going to speak to you once at the start of the process, speak to you here and there, and then it's going to be his team dealing with you.
Happens all the time.
How do you deal with that?
I probably have to write into about 80% of my agreements that I'll be at the open homes. And I have no problem doing that because I am. And I am at the coalface. So
when you've got like 10, 15 opens?
100%. Like I've got a phenomenal structure in my life to be able to do that from an organizational perspective. And just adding the value. Like I think if you are actually and genuinely adding the value, you can't lose. And it is very competitive, isn't it? And it is very dog eat dog. And I think you've got to take a stand as an agent. Like I was competing with, again, a top player last week. And there was a difference in our fee. I think I was at 1.85 inclusive and he was at 1.5% inclusive on a $4.5 million property. But going back to this adding value thing, I'd helped the owner buy a property and really assisted her with that. I probably saved her 50 grand on the buy. Maybe even 75 if she would have listened to me more intimately. And she even acknowledges that. But circa 50. And when we got to the conversation about appointing me or going with this other agent, she pressed me. She said, look, it's a big difference, 185, 1.5 inclusive. And he's the top of the top player, right? And she said, there's a big difference. Like he's not going to do a bad job selling my property. My response was, here's the quantum value of the difference between the fees. I broke down, what was it, 20, 25 grand circa, right? I said, I just saved you X on a buy, so I'm adding value there. Our relationship means a hell of a lot more to me than yours and his because she had just met him and I've known her for a long period of time.
So you built the rapport.
I said, if you don't see the value, roll with him.
Yeah.
And good luck. She came back, she said, no, I do see the value. So I think as an agent, you've got to take a position, but the key is you take a position after you've added the value. Where I find most real estate agents get it wrong is they have this sense of entitlement for doing sweet fuck all. And I'm sorry to swear again, but it's the truth. Right. And real estate agents in today's day and age, they need to be adding the value. They've got to, I've bought in the last, and I'm not a buyer's agent, right? The last 6 weeks, I bought a house for a client for 17.1 million, went to auction, bid for him. We had a whole strategy around it, thrilled. And another client for 10.6 as well, auction, whole strategy, where they would have paid a hell of a lot more. But because of the strategy I worked on with them, they saved money. I didn't charge them any money for that. I'm not a buyer's agent. I'll leave that to my man, Simon Cohen, right? But at the end of the day, if you're not adding value and extra value, significant value, well, you're going to get f***ed in this market.
So I guess the answer to the question is demonstrate how you can add that value, right?
And do it.
Justify your fees, justify your accolades by saying how you add the value throughout the process and what that person might not be able to do, right?
Yeah.
So, all right. Well, that was we stayed on that topic of advice for agents for a while, but it was a good topic, and a lot of people on this podcast, like I say, would be tuning in for exactly that. Just to wrap up, if we can quickly cover 3 more different people that you deal with in your database or deal with in your business, I should say.
Yep.
Buyers, landlords, and vendors.
Yep.
Advice for each in this current marketplace, current landscape. Let's start with the buyers. What's the advice in the current climate?
Don't roll the dice if you're in the driver's seat because it can change very quickly and you don't want to be regretful. And I think there are more and more opportunities to be in the driver's seat right now. Time kills all deals, right? And, you're seeing some people now more so than ever because you don't have that frothiness, you don't have that FOMO. The clever ones are trying to be strategic and they're trying to play games, and I see every single one of them miss out. So I really do.
So even in the current climate where there's a bit of lack of confidence, as a buyer, move quick.
If you want it. Right?
Yeah.
I get it if it's a second, third, fourth option. You're not going to have any regrets around that. But if you want it, don't muck around.
Take things to auction or
I like auction, but look, whatever road's going to maximize the value of the asset, we'll take that.
No, I don't mean from the vendor's point of view. I mean from the
buyer.
From the buyer point of view, try and snap it up pre-auction or let someone show their cards at auction.
It depends. When I'm repping a buyer, I always say run the auction. Let's go. I like that transparent nature of the process. But that can change because offers can come forward before auction. If that's going to risk you losing out, don't muck around.
Mm-hmm. All right. Well, then we
always have a plan B.
We sort of touched on it now. Let's jump back on it. Vendors, don't get too confident about auctions at the moment, or what?
No. I think you can run and have some great auctions, for sure.
Listen to your agent, really.
Whatever road you need to travel to maximize the value of the asset, and those words are key, right? Yes, we want to get the price that you want, but this, as much as hitting your target, it's about that. It's really about maximizing the value of the asset. So I think you've got to really pay attention to the response to the campaign. That's going to tell you a story. Take that information and make an informed decision around that if you're serious about moving forward, right? Don't be unrealistically stuck on a number just because you think that number is achievable based on paralysis by analysis, right? Really look at the response and make some informed decisions, because I have seen some crazy shit, not even the last 12 months, the last 3-4 years, where some vendors get greedy and they got lots of money. So it's not about them having to trade or not. Bad commercial decisions.
Yeah.
Based off of greed. Bad commercial decisions. Yeah. So,
and to your point about time potentially killing deals, if you've got 2-3 serious contract holders or bidders on a property and you're waiting for a better price, those 2 to 3 can go down to 1 pretty quickly if a good property pops up on the market in that period.
If you've got 3-4 bidders bidding on your property and it's not selling, you have an expectation problem, fact. Right? There's no other way to look. That's black and white.
Yeah,
There's no other way to look at it.
Yeah. And I guess we already touched on it, but landlords, once again, probably don't be greedy.
I think keep your tenants close. So keep them happy.
Keep them happy.
Hold on to them.
Don't try and jack rents right now.
Definitely not. I wouldn't be mucking around with being, just.
Don't buy into what you're seeing on the media, basically, and thinking that, this rental crisis is an opportunity to increase the rent.
No.
Nurture your tenants.
100%.
Keep them happy.
Yeah.
All right. And just, I guess, to wrap up, last question, what are your records in store for the Sydney property market to come, right? Next 6 to 12 months, what do we feel is around the corner for going into winter and spring?
I think we're pretty consistent level in terms of seeing what we're seeing right now and continuing that journey. I, like I said, like to focus on what's happening today, not worry about what's happening tomorrow. But I don't see it majorly changing in any way, shape or form, unless there's a crazy world development, a war, which will have an effect and will tighten up, spending, and will make people a hell of a lot more cautious. I think that'll have an impact. But I think we're in a relatively stable line here. You're going to see things do well. You're going to see things struggle. As a seller, a bird in the hand's better than 2 in the bush. If it's within shooting distance, if it's within range, like I say, and the information you've gathered through the process has confirmed that, don't muck around, because there's a lot of opportunity out there.
Because I guess being on the front line once again, you're getting phone calls of people trying to play the market or when to sell. You're feeling, I know they're never 100% honest with you when they have, I guess, financial pain, but are you feeling some people that are hanging on for a while before selling and they're not in the best position, or it's just a steady flow of transactions?
I don't think people would tell me, but the honest answer is no, I'm not feeling that.
You're not getting the phone calls that feel like people are uncomfortable?
I'm just not. Yeah, there's a couple of anomalies here and there, but consistently, no way. No.
All right. Well, that's a great wrap for today's
Thank you for having
podcast.
me.
You can see the passion that is clearly the driver of your success. So it's been fantastic to have you on board, Gavin. We would love to revisit this again in sort of 6 to 12 months maybe and see maybe how some of these comments that we've discussed today have panned out. So thanks again.